Hi, welcome to another BPO Connect webinar. Today's topic is acquisition funding for your clients and discharge legacy tax debt. I'm Catherine Gallen from BPO Connect, and I'm joined by special guest presenter Ken McLeod of Elevon Financial. Ken works with BPO to assist accountants and their clients with innovative financial solutions. Ken is going to talk about what he does at Elevon Financial and his work helping small to medium businesses acquire other businesses and assisting some businesses in discharge legacy tax debt. So without further ado, I'll hand over to Ken to explain.
Super, Catherine. Thank you very much for allowing me to be here today and to talk with all of those who've jumped on the call to hear what we're up to at Elevon. I'm hugely respectful of your time, and with a short window of opportunity over lunch, I will be going at pace, but please email me or otherwise call me if you have any questions or matters for discussions. So who am I? Well, firstly, I'm very privileged to have trained as an accountant, though very early on in my career, but in fact, after a 10-year career in investment banking in London, Sydney, and Tokyo, my last posting was as an accountant, where I was head of finance at GE Capital in Sydney, looking after the commercial finance interests of GE in Australia and New Zealand. And that was only 2003, so it wasn't that long ago. And of course, once an accountant, always an accountant. We never forget what a debit or a credit is, of course. Since then, I have been entirely focused on helping small and medium-sized businesses. And firstly, when I left GE, I established Scotia Finance, which offered a debtor finance solution to SMEs before a 5-year focus on venture capital. And the blend of lending off our own balance sheet with Scotia Finance and working with venture capitalists has not only given me plenty of scars, as I'm sure you can imagine, but an unusual edge when working with SMEs today through Elevon Financial. And in particular, we have been working with the BPO network of accountants for the best part of the last year. So through Elevon, we facilitate lending primarily for SMEs and entrepreneurs. And we've been operating for a couple of years offering structured business and commercial finance solutions to SMEs. And this has been no easy task, as you can probably appreciate, because there's some key issues facing SMEs. And for entrepreneurs and growing businesses seeking finance, it gets worse as the more they want to grow, and whilst the risk to them and lenders alike gets exponentially greater, the steeper the growth trajectory, it doesn't detract from the fact that when complex structures are involved, many mainstream lenders find it hard to devote the time to find out what's really going on. And given the sums of capital are not always that large, it is just sometimes not commercial to invest the time in to find out what's really going on if that's what's required. And secondly, it's no mean feat as a growing business to keep credit records squeaky clean. I mean, stuff happens. And finding lenders that are happy to deal with discharged bankrupts or Part 10s or even those with outstanding judgments feels like a lost cause for most borrowers. And thirdly, and as you well know, there's very good reasons for not submitting tax returns either early or for that matter on time. But without tax returns for banks, and certainly of late, it's tough to get them to open the doors for you. And fourthly, and it's been said before, and I think I even said it, that the ATO is actually a cheap source of capital. But virtually every mainstream lender will walk away from businesses with legacy ATO debt. And using this source of funds through a payment plan is really only a short-term tactical financial solution. It's not a long-term source of low-cost funding, as I'm sure you've realized with your clients. The second major problem that SMEs face that is pretty much a rule of thumb with only a few exceptions nowadays is if there is no equity available for banks to lean on, then it's virtually an outright no to overdrafts and no to debtor finance and no to lines of credit and trade finance. And there are some small exceptions. For ANZ, for example, is offering a small unsecured overdraft facility, but subject to and subject to and subject to. But the essence is that without equity in property, SMEs face a significant uphill battle to secure growth funding solutions. And lastly, the service in general from mainstream lenders tends to be led by 20-somethings at the front end with limited experience or bandwidth, with virtually no business experience. And when you do get through the gatekeeper, you're exposed to the behemoth of bureaucracy. And you may get a banker, but he certainly won't be there in 12 months' time, and then you have to start all over again. So when we were looking at Eleven, when we established it a year or so ago, in putting our plans together, we had to make sure that the lenders and the financiers and the funds which we worked with, they had an approach which was simple to understand and minimized disclosure on what was absolutely necessary, avoiding unnecessary cross-collateralization. And above all, these financiers needed to be available to offer solutions that offered all the same benefits, or most of them, without the family home as security. And clearly this isn't possible in all situations, but in business finance, we really needed to be looking at business cases that could stand on their own 2 feet without home equity as security. So digging deep into the networks we've developed over the last 15 years in Australia, Eleven has predominantly focused on deals with non-bank and private lenders that have flexible terms, are able to work with unusual circumstances, and we use private investors where it lends itself to do so. And of course, but we'll use banks if it makes sense to do so. We're not going to cut the banks out if it's easier, it's more cost effective, and of course you've got all the disclosures available. I'm happy to make those disclosures available. We will use banks. And then the third thing which we've founded ourselves on is the service level. I mean, strategy is always first, and so we always ask, why are we doing this? Why are you looking for this finance? So, for example, it might be the case you think a debtor finance solution is the right way to go, but we would always think around this or think around the obvious solution to find a better, more cost-effective, or otherwise quicker solution. So, strategy is always first. And I won't go too much into our process, but we do undertake a transparent, structured process in our dealings with clients, and in combination with our back office partners for both property and business finance solutions. And we can go more into our process in an offline conversation, if you like. So before I talk in more detail about acquisition funding and legacy tax debt funding solutions, a quick snapshot of what we do. So on the property side of things, most of our property solutions follow the low disclosure, non-bank or private approach, and focusing on the asset in question and the development in question, keeping the complexity to a minimum and allowing for the process to proceed as predictably as possible. And where required, we can short-term fund, or we can top up second mortgages, etc., if the situation demands it. And on the business finance side of things, we work with non-bank and financial institutions to provide cost-effective, expedited solutions to SMEs offering invoice, trade, and inventory solutions. But the power of these solutions really becomes extraordinary when you have a situation where you can combine these facilities to create high-stakes outcomes, like in the case of a recent client who was seeking to acquire a business. So one of our featured products is acquisition funding. And in this instance, the client was the management team who was seeking to buy the majority shareholder out of the business due to ill health. There was no equity available in any personal property to approach the banks for a cash out to pay the vendor, and they needed all up about $350,000 to secure the business and inject some working capital into the business. And with the balance sheet only showing around about $330,000 worth of debtors, on a straight asset-backed finance basis, this didn't look feasible. But the solution that was presented to the client was as follows. Looking at the balance sheet, firstly, the financier was happy to offer $250,000 worth of secured facility on the debtor's balance. And secondly, after a deeper understanding and appreciation of what the working capital requirement was for, the financier was able to offer an unsecured trade finance facility to allow the business to trade without the benefit of the cash that would have otherwise come in from the receipt of debtors, which of course was given up to pay the vendor. So whilst the trade finance in this case was expensive, the risk for the financier is elevated only while the goods are in transit. this company is an importer from China. So when goods are in transit, the cost is higher. And as soon as the goods are then invoiced to the end client, the facility then reverts to or converts to a lower cost debtor finance facility. But the key result for this management buyout client is that he now has 100% ownership of a growing business with little or no money at stake. And more importantly, the new owner's home has not been presented as collateral, to allowing him and his family to sleep easy in the knowledge that the home is not on the line. The second thing I wanted to talk about today was tax debt discharge. And this was a much more simple approach to uncover solutions for our clients. And it was just a case of finding tolerant financial institutions that focus on this area, and one or two, who understand the mechanics and have developed products around it to make or allow the borrowers the freedom to operate without the ATO on their back. And in this situation, the problem was not the largest ATO debt that we've seen, but it had built up over time, over a number of years, and was now preventing the business from securing new funds through other finance providers. And further, in this instance, the ATO had actually been putting more pressure on the business owner to pay it down more aggressively. And if that wasn't enough stress, getting financial help to do this was virtually impossible. And certainly straight unsecured lending to accomplish this is not currently available, at least as far as I know, but there are one or two institutional solutions that are able to do it on a secured basis, cost effectively. And this one was solved by securing an advance on a related commercial property at 80% LVR in an with an interest rate of 6.99%, allowing the client to be free of this legacy debt. But more importantly, now they are now able to seek other financial solutions or other finance solutions that were or still are sensitive to the existence of an outstanding legacy ATO liability. So before we wrap it up, so the other products which we are focusing on, we've got a self-managed super fund product that we're still able to achieve a 70% LVR even with all the recent changes. We are currently spending a lot of time helping non-residents secure property, and with the recent Chinese currency devaluation and the risk of more of that to come, we're expecting an influx of this type of financing. And we have a no pre-sales construction or development product for smaller scale development projects under 5 million, which avoids the need, and a great benefit to the developers, it avoids the need for them to pre-sell their product at a discount in order to satisfy bank conditions. So these are our areas of focus at the moment. So I did warn you of an intense experience, but that's about my 10 minutes that are up. So wrapping up, Eleven Financial is, in my opinion, is no doubt is an essential for you to consider for your toolbox when you're helping with your SME clients. I mean, Eleven is not an investment bank, but we're able to think outside of the box and bring to the SME the needs of SMEs using investment banking experience and using established institutional finance and products already out there in innovative ways. We are able to offer multiple solutions, multiple structured solutions, and yet a comprehensive suite of vanilla finance products to account for most business situations. So I hope you've enjoyed this very brief yet jam-packed presentation. I hope that we have an opportunity to meet at some point and see if I can add some value to you in your ongoing service to your clients. So thank you for tuning in, and thanks again to the BPO team and Catherine for inviting me to talk about what Eleven is doing and its focus. You can connect with me online at ken@elevenfinancial.com.au or on 0424158933. Have a great rest of the day and enjoy this cool weather.
Thank you very much, Ken. And remember, you can sign up for our next webinar on BPO Connect website. So we hope to see you next time. Thank you.